This is a very tough economy, and households and businesses still face very significant challenges. Unemployment, of course, is very, very high. Commercial real estate losses weigh heavily on many small banks, impairing their ability to extend new loans. Credit is tight for many small businesses. Foreclosures, driven now principally by unemployment, are very high. Today, I want to outline our strategy to address these challenges going forward and how we're going to wind down and ultimately exit the TARP. There are 4 elements to this strategy. First, we will terminate and wind down the emergency programs that were put in place at the peak of the crisis that were necessary to break the back of this financial panic. In September, we shut down the money market guarantee program, which earned taxpayers $1.2 billion. We've effectively shut down now the capital purchase program, under which the majority of TARP investments in banks were made. Second, we will limit new commitments under this program in 2010 to 3 areas: housing, small banks, and credit markets for consumers and small businesses. For housing, we're going to continue to work to mitigate foreclosures for responsible American homeowners as we take the steps necessary to continue to help stabilize the housing market. For small businesses, we've recently launched initiatives to provide capital to small and community banks that commit to increase lending to small businesses, and we are reserving additional funds for additional efforts to facilitate small business lending. And finally, we're going to continue to support the securities markets that are necessary for credit flows to consumers and small businesses. Third, beyond these limited new commitments, we will not use remaining EESA, these are TARP funds, unless necessary to respond to an immediate and substantial threat to our economy stemming from financial stability, a determination that I will only make after consulting with the President and the Chairman of the Federal Reserve Board and submitting written notification to Congress. Fourth, we will continue to reduce our financial stake in banks and manage down our other investments. We will keep the government out of the business decisions of these companies, and we will exit from our investments as soon as is practical and return ownership to private hands. This strategy requires a limited temporary extension of the authority provided by the Congress under the Emergency Economic Stabilization Act. It would be irresponsible to do otherwise.